Thanks so much for tuning into this earnings interaction with the management of Praj Industries. It's good to be able to talk to a company which in this quarter has come out and done decently well on the operational front. Yes, their gross margins would have declined, but they have maintained or improved actually their EBITDA margins, which is actually a really good sign. The questions, though, are not really about just the operational metrics. Yes, it will be a part of this interaction, but it's also about how is the continuation of business looking like. Mr. Shishir Joshipura joins in. Mr. Joshipura, great having you. Firstly, I hope all is safe.
Hi, Niraj. Good afternoon, and very happy to be back with you conversing.
Yeah, thank you. Can I start off with what was also one more highlight of the interaction of the quarter for you, and that was the top line growth. YOY, one would have anticipated it would look good, but QOQ was very good too. 38% is quite remarkable. Key drivers.
So I think what you're seeing now is something that we've been talking about for last 3-4 quarters, that the whole build-up on the domestic ethanol side of capacity creation that is happening. Some of the initiatives that I talked to you earlier about are efforts on modularization and working with some of the world leaders in their business in clean tech and green tech. Our focus on ZLD systems, so all pharma systems now picking up well. So all of this it had to start to, in a manner speaking, roll out on the performance front as well. We just can't remain at potential all the time. And that is what we have been attempting to do, that, we can always keep talking potential. And I can tell you that in 2030, I'll be net zero, but maybe I'll not be around in 2030. So that can So we strongly believe that what we say we should do. So what I told you couple of 3 quarters ago, something that, this is the potential, this will translate. So you're seeing that translation now coming out to play. And as you probably would have noticed also, that this is now the 6th consecutive quarter for us to have a higher order book than the previous one. So that is also going to help. So that also means that going forward, the sales pace will continue to build.
Yeah, a smaller portion, but when I saw your numbers, and correct me if I'm wrong, but I thought high purities, it's the smallest part, but I'm just saying it's continuing to see traction. I reckon this quarter around, the quantum of order and the percentage contribution for quarter 2 much higher than quarter 1, I believe much higher than quarter 4.
Yes.
Is the traction there?
Yes. So they are, we took a bet some time ago. I would not call it a bet, but we actually decided to push a strategic dimension, which says that we will focus in pharma. Also, there are various spaces that one can operate upon. So we thought that we'll focus on vaccines and complex injectable space. And those are the two that have really taken off in the pharma space, so which is really helping us. We also very selective internationalization policy for that, rather than going and spreading ourselves all over the world. We said, no, we'll just focus on key markets. It's just that what calls we took have proven to be correct. And so the business dimensions have changed. That's a business that is very steady state. It's not lumpy in nature. So it allows us to do every quarter 15-20% better. But that obviously does add up to a substantial sum by the end of the year.
Got it. The decibel levels, Mr. Joshipura, if they were loud 2 or 3 quarters ago around ethanol, are now almost deafening, right? In the sense that you see the minister come out and say, hey, we are looking at 100%. In an India Today conclave, he says, nahi, ab bhul jao petrol, diesel. Abhi sirf ethanol pe 100% pe chalega ya electric chalega. What's yours? I mean, what's the kind of feedback that you get from companies which want to order this and all?
So let's look at it from 2 perspectives. I mean, let's take me and you, and when we drive a car or a two-wheeler or SUV, whichever one that we hitch ourselves on. To me, does it really matter that when I go to a pump and take an energy input into my vehicle, is it in form of electric current or ethanol or petrol? I want my vehicle to run. I want to run fast, and I want to run it at its most optimal cost. Given those parameters, if I am able to address different solutions, which then have secondary benefits, which are of a much different and significantly different nature. So, for example, if you go to ethanol, we say, look, this will definitely help abate the climate change problem. It's like a vaccine for climate change. Not that there is any vaccine truly possible, but to the extent we can, this is something that will help reverse the climate change speed, right? So if I tell you, put ethanol in your car and maybe your grandchildren will have a better future and you'll pay a lesser cost at the pump, I'm sure you're going to say yes. Even if I were to tell you, to ask you a little higher cost at pump, maybe you'll pay, because it's something about future of our own children, right? Next generation. So that's something that needs to sink in. And I think one of the things that has happened over the last 24 months or so, there is an absolutely newfound consciousness around environment and pollution and climate and all these issues that are not visible right in front of our eyes, but they are definitely there. So I think that is one big travel that in general humanity has done, that we are much more conscious about it just now. Given that fact, and the fact that Brazil has led by example, so we are not trying to invent something, it is already out there for somebody to say, well, they've done it, it's already working for them. Third, it makes immense sense. As a country, I today take my foreign exchange and I give it out to import crude oil, which then comes and pollutes my environment, right? It runs my economy, sure, but it also pollutes my environment. The alternative is the same money I take, I give it to my own farmers, right? I give it to my own industry. They produce something which is not going to damage the environment, right? Which will you choose? And I think this just whole thing coming together is something that is really happening. So you're absolutely correct. Plus, then when you want to make, if that is understanding, then obviously there needs to be a whole slew of what I call as measures that allow the ecosystem to become robust and sustainable, which is what is happening now. So freeing up the feedstocks, bringing in the GST regime, moving away from the sugary feedstock to starchy feedstock, creating incentive programs that allow people to come and set up capacities, create long-term contracts with oil marketing companies for buy. So I think these are all enabling factors that are really creating a pull. And given the fact that A, OMCs are the buyer, B, is a definitive demand, C, technology is very nice and proven, and margins are nice, it's really attracting a lot of investment. It's a new goal.
Yeah, it is. And no questions around that. But I'm trying to think about how this could proceed, Mr. Joshipura. We are at the end, when I read your presentation, we are at 8.5%. Assuming that we do want to go to 20% or probably more, but let's assume 20% for the time being, then we maybe move on to 100% ethanol vehicles. We might get ethanol in diesel for all you know, what have you. And we are already in mid-FY22. So the question is, does the run rate of order inflow for companies that are making ethanol machinery expand at the same pace in this initial part wherein the capacities are not completely created? How does it shape? I meant this to ask you this for the last 2 or 3 quarters. I thought I'll do it now.
So Niraj, I think there are 2 dimensions to this. So if you look at companies like us, we have very clearly an understanding of what is happening in the market space and what needs to happen even as we move forward in terms of capacity creations. Having understood that, then I need to obviously go back and say, all right, so what's my execution capability at different phases of this project? Okay, so there's engineering, which is a big phase. There's manufacturing, that's a big phase. There is supply chain for us. And of course, then there's a construction and running et cetera. So we have to go through all these 4 steps evaluation to see where is it that I create a bottleneck. Because if I create bottleneck in the beginning, the rest of the functions will never see the tide come. And only when it unbuckles, they'll suddenly be flooded with a tidal wave. So very clearly, we understood how do we go, and there are different levers that one could use. And that's what we decided to do, that rather than just say, instead of 10, if I'm going to execute 20 projects, that does not mean that I multiply everything by 2. And then it doesn't work. I had to use different levers, saying what kind of mass customization can I do? What kind of standardization can I do? How can I do a cookie cutter approach so that it repeats? The idea was to crash time. Because if you can crash the execution time, well, very clearly, I would have expanded my capacity to deliver same, more with same. So one clear principle we are following is let's do more with same, but doing it differently. And that's one. Of course, we are augmenting our resources, goes without saying, because the pace is pretty high. But the good thing is this was not an accident for us. We knew this is going to happen because this is the only way it will go forward. Yes, the 2030 getting advanced to 2025 has further accelerated the whole thing, though it is sort of concentrated. But other than that, I think we have looked at every single lever that could be available at digitalization, standardization, mass customization, augmenting of resources, outsourcing. All of this put together, we are right now in a pretty comfortable space. But I was telling yesterday also that when we look at everything initially, and that is why actually it's a good problem for us to solve. Initially, we had thought that whatever we have now created would be good enough to last us and serve our customers till 24.
Mhm.
That's
Okay.
not the case anymore.
Oh, okay. That's a
Yeah.
good problem.
Yeah, it's a good problem to solve. So we're going to advance it by at least a year, if not more. So I've said yesterday that we will finally form up our capital expenditure plan that earlier we had said we will not need to do. We may have to do that and advance it by a year to take care of the load the way it is building up. So that's something that we will definitely do. So it's a good problem to solve.
Yeah, no, actually, I was going to ask this to you, that if your capacity utilization levels, as you had told me 2 quarters ago, were very comfortable, maybe 60-70% of what it was, and therefore, does it mean that order inflow and execution kind of stays at a curve which is almost maybe say 20-25% for the foreseeable future?
Yes, it is. It is appearing in that direction right now. That the whole the momentum that has got built into capacity creation and the way the whole ecosystem is moving, it will call for that kind of continued growth in the sector.
Okay, and I'm just wondering if you are advancing this. You meant FY24, right? Not 2024. FY24.
Yes.
2000.
Yeah.
FY24. Okay, so you would probably have to do it at least in FY23. Advance that plan to at least FY23.
Yes, at least 1 year.
Okay, got it. Okay, I'm guessing funding would be an issue, and we'll come to that when we'll cross the bridge when we get there. Just wondering, Mr. Joshipura, the other part of the equation, which is right now the clear burning picture for India Inc., is the operational metrics. Now, from Q4 highs of whatever 30.5, you had guided that the numbers will come off. They came off quite steeply in Q1. You've bounced back a little bit in Q2. And you've shown growth both QOQ, YOY, which is commendable, whereas the rest of India Inc. hasn't. Do you reckon this is steady state, or in this very fast changing world, it's difficult to say what the operational metrics would look like?
No, so very clearly we see, in fact, if you really traditionally look at our company, for us, the second quarter of the year is traditionally the lowest quarter for us. It's a very slow moving quarter because of the seasonality of the business. But what has changed is the fact that now we are moving away from only sugary feedstock to also adding the starchy feedstock. And starchy feedstocks are not seasonal. They are year round. So to that extent, we expect the curve to even out as we move forward from the perspective of the up and down in a quarter. But apart from that, I think we have a order book which is continuously building positively forward. So as we move forward, we'll only continue to build on this space. We're not going to go down again.
No, but what about margins? Will they stay steady at these 8.5, or is it difficult to predict?
Well, on the margin side, we clearly have. So what had happened was when we began the year, we had an order book of about 1,700 crores to execute. And from that order book, and our contracts do not provide for any variability based on raw material index changing or anything like that. That's not the nature of the industry.
Yeah.
So given that, and the fact that in the last 6 months, we have seen almost a 60% hike in stainless steel prices. Yeah, in the last quarter, it was 20%, but in the last 15 days, it is 15%. So we are looking at, that's what I'm saying. I wake up every day in the morning to a new steel price.
Yeah.
We meant it that when I said that. So I think that is something that has to stabilize. But we have now come to a stage where I believe that this cannot continue unchecked, right? Some moment in time, even if it was to sort of start tapering off, we will be able to see the leveraging impact. We have already said that during the whole year, we expect a 2 percentage point impact on our margin because of what's happening to raw material prices. As we move forward, we are bringing in the new prices.
Okay.
Basis that we are doing. But if further keeps on changing at this rapid rate, I hope not so. But if that is not the case, we are good. So in many cases, therefore, this should be the base case.
Got it. I'm just wondering, is it an industry structure that there's no pass-through? Because, almost everybody, including Larsen & Toubro, has a pass-through. Why is it that you being the leader are not having a pass-through?
The structure of the industry is one, plus what is happening is the customer's expectation is anyway, guys, the project size is 9 to 12 months. So the mind map is not ready for a 9 to 12 month kind of. They're saying, no, you please block on the day we. But my problem is today when a customer gives the order, in next 30 days, the price will change. That becomes too much of a management to do in terms of how fast can you go and order your. So we have taken several steps. We have created a new model for our pricing. We call it a real-time cost model. Wherein we try to figure in not at the time of bidding, but at the time of closer to finalization, what's the costs are prevailing. We are moving to an advanced planning model by which we're able to order out the raw material much in advance of the contract, only on an anticipation basis. So we are taking, our engineering is moving to a standardized thing, so we don't have to keep on buying different thicknesses all the time. So there are several steps that we are taking to ensure that we mitigate it to the extent it is possible. The rise is too steep, and therefore we're going to have those hits of 200 basis points, as I said. But overall, we will be able to leverage the volume growth in our favor.
Okay. So, Mr. Joshipura, 20-25% ballpark, give or take a few basis points here and there. Order book, revenue growth, margins. I heard you say that this could well be the base, and therefore on the below the operation line as well, maybe the numbers they look steady in line with the top line growth. I presume that would be a good summation of how the numbers might look like for the next couple of quarters at least.
It's correct.
Okay, let's move on to the other things which I always look forward to. So I have 3 questions on these. One is, last time around when we spoke, or maybe the quarter before last, you told me about something that you did which really excited you, wherein you went to a gas station in Uttar Pradesh and you spoke to the people who are using the biogas, I presume, and how effective was it, etc. So that was amongst the most exciting business things that you did. What was it this time around, the last 3 months?
All right. Was there an equivalent? Yeah, I think I should share this with you. So during the first phase of the pandemic, we had actually received a very interesting contract from the United States to build one of the largest pharma-grade alcohol facilities in the United States. That was the contract that we got. I can only tell you one thing. I have never met a customer who's more meticulous and more demanding. Never. In my entire career, I've never met anybody like him. And I joke with him, his name, that, when you part your hair in the morning, he's one of those guys who will count exact on the left, and if the count is not correct, he will redo it. He's that kind of fastidious, and that's how he built his company. It's a marvelous plant that they've built. And the first time they were dealing with us, because they felt that our technology was definitely better than the locally available solutions in the United States. After the contract, their project team came on the picture, and for the first 60 days was a tough time because they were trying to test us, saying, "You guys," I mean, he actually used this. He said, "You're a third world country company. I don't know whether you can do the plant for us." Was the project guy, not the owner now. The project is talking to our project guys. And I really had to intervene to tell him that, no, listen, there could be some gaps in understanding, but we are not a company which is standing by saying we don't know. We are here to find a solution that makes you happy. For us, the fact that this plant should succeed is much more important than anything else in our life. So don't worry about that. We're not going to count every single dollar. His experience in the past with some company was not so good about it. I was and so he kept on saying this, that no, you're third world country, you don't know how to deal with first world. I don't know why our management went to you, all that kind of stuff we had to hear. We shipped the plant on time without any delay. And that was the first surprise for him because the world was crumbling around on the pandemic problems, but we still made sure that plant was on time. After we shipped it and the plant was 1 week into the sea, he calls up to say, "You know what? We have decided to shift the project site in the United States, but a different state. And that would mean that our feedstock will change. So now, please tell us what we'll do with the plant." He said, "What we'll do? We'll let it arrive there. There's nothing we have for us to do. We'll do the engineering calculations on the piece of paper, and we'll tell you what changes are required." And we actually did that. And so some equipments were not required, some new were required, some modifications, all that we went through. And then, absolutely unsolicited, I get an email from this guy who called us. I don't know whether our management did the right thing by dealing with you guys. He writes an email to me saying, "Over the last 6 months, I have dealt with your team. And I must say that you guys are absolutely worthless." Yeah, he said, I'm absolutely impressed with your level of knowledge and understanding. And I'm now looking forward to building every plant of ours with you in future. So that's a huge turnaround, isn't it? And, I was telling our guys that this is an aha moment. Yeah, and this is really an aha moment. for the company, for us, for all of us. As a country, we need to feel proud that we change. So I think somewhere along the line, what we did was right. And I always believe that if you do what is right for the customer, eventually it will pan out. And this was the proof. So this was something that I just came up just before our talk started. The team came back after commissioning the plant. So I just giving them a small reward to say, guys, you really did hard work to change the customer's opinion. And I told them the same thing. I said, this was an aha moment.
Congratulations on that. I'm guessing this from a business perspective as well, Mr. Joshipura, opens up multiple doors, right? Because references play a big part in such things.
Huge. And I'm sure that as we move through and a couple of quarters down the line, we will talk about what impact this is on our business.
Okay. And one more question, Mr. Joshipura, before I ask a final business question. What's the new exciting thing that's happened at Praj Matrix Labs in the last 3 months? Anything that you've unearthed which is path breaking that we haven't spoken about?
Yeah. We've done. We continue to do these things. So we made an announcement around bio-bitumen. I don't know whether you.
Please tell us about it. No, I remember having read it, but please tell me about it.
So, typically bitumen is a refinery product and crude oil refinery product, and we have found a way of making it out of straw. And this is something that we are very, because this now. But the good news on this is that this becomes a co-product now. I can take rice straw, I can make ethanol out of it, and this becomes a co-product. I can take rice straw, make biogas out of it, and this becomes a co-product.
Okay.
And this is a co-product that could actually enhance the viability of the overall financial viability of the plant.
Wow. So you're saying a customer which takes up a plant manufacturing ethanol from rice straw will be able to manufacture bio-bitumen. So even the waste will have some bit of reward for the customer.
Tremendous value transition, because bitumen is not cheap. Bitumen is very expensive.
Wow. Okay. Does this give you pricing power, Mr. Joshipura?
Because it enhances the scope of the market. Right now, 2G has its own challenges to overcome as far as financial viability is concerned. But when you bring in a co-product, definitely yes. I personally believe, and that is what I was talking to one of the very, very large oil companies in the world, and they said this is the kind of product they will have to look for, because in their opinion, 5 years down the line, the way the refineries will operate and the carbon tax regime will work, they will be forced to mix 20 to 30% of bio-bitumen into bitumen.
Sorry, I missed that word, Mr. Joshipura. Sorry.
They'll be forced to create a mixture of about 30% bio-bitumen and 70% normal, because they won't be able to get 100% full bitumen.
Okay.
It's a road construction material. It's required world over.
Wow.
So this is something. So that's something pretty exciting. There are other things as well, but I thought that this is something that could touch our lives pretty soon. So.
Yeah, and just a follow up. Then, are you seeing conversations with sugar companies, for example, or oil companies in India which are setting up ethanol plants, telling you that yes, we want such things, and are the orders improving? Just wondering.
We are speaking to somebody who has a larger interest in creating bio-bitumen as a product offering.
Okay. This is international or local?
International.
Okay.
Multinational. So they were saying, he will put all the money. Let's just get the stream from which we can strip this out, and then we'll create a contract around that with your customers.
Wow. Okay. Well, congratulations on that, Mr. Joshipura. One final question. The way things are moving ahead, I know you had told me earlier that you don't need to do capex, but in your own words, you are advancing that by a year. I'm sure your cash flows are looking okay. But being the nature of the business, do you reckon that for doing any of these activities, you would need to raise any kind of equity capital, or would debt do the trick for you?
No, we don't have. Not for that purpose. We don't have to raise any equity or assume any debt for meeting our capex plans.
For any other purpose?
We today, from wherever we see, we don't need a debt or the equity. And I'm not in the next 2 years, definitely not. But if we go forward and a model evolves in renewable chemicals and materials, where we also have to become part of the producing entity of the end product, then that could be different. But that's little far out right now for us to comment on. Per se, for the capex on our businesses, I don't think.
Okay. Great. Well, one certainly hopes that there are no more surprises, COVID supply chain related. for India Inc. and for you. But thank you so much for speaking to us and giving us some tremendous insights into business activity as well.
Thank you. Lovely speaking with you as always. It is your questions that actually elicit the answers out of me. So it is the trick of the questionnaire, the guy who asked the question to get the right thing going. And thank you so much. It's always been very, very interesting to speak with you.
Thank you, sir. As we always say, we do